TGO traders and investors. Matt Buckley, call sign Wiz, the primary and weekly model portfolio manager here at TGO, and seeing some relatively weak economic news this morning, which is interesting because we've been shifting all over the place this week, right? We had the sell-off Monday on the Italy concerns and sequester. We had a rip-your-face-off rally Tuesday after the market figured out that Bernanke wasn't saying anything that he hasn't already said before other than, I'm going to continue to prop this market up until the cows come home. So rip-your-face-off rally Tuesday and Wednesday, also on some good news out of Italy. Very good bond auction out of Italy. But we also had some solid economic news for the past couple days. Especially on housing. Some really good housing numbers for the really all week, and we're going to get some more housing numbers tomorrow, but kind of a mixed bag this morning. We're waiting on Chicago PMI coming out at about 9:45. The Richmond Manufacturing Index came out pretty strong yesterday. So as usual, folks, we're kind of seeing a mixed bag of economic data, which is perfect for this market environment, right? As you know, my strategic mindset is we're going to move laterally until we really see some catalyst to the downside, and it's not going to be sequestration. Sequestration is going to be a non-event. It's a big yawn. It's not even a ripple in the ocean, these spending cuts. The president's done his best to try and gallivant around the United States and scare the hell out of everybody. It didn't work. Mr. President, just about every American knows that we need to cut spending. And you scaring us, first of all, it was your idea, dude. It's just incredible to me how the media just completely ignore that fact that the president was the one who came up with the sequester idea, and now he's calling it the dumbest thing ever, and it's dangerous and all sorts of other stuff. And he came up with it. So the cuts are going to kick in, and I really don't think the market's going to care. If anything, we might have a buy on the news event, because once something is known and it occurs, the market has clarity. Leading up into it, the uncertainty, the market shifts around. So I think we're going to see a rally. You just can't fight the Fed in this market, and I think the next kind of choppiness will be leading up to the budget debate, right, towards the end of the month here. Unlike my business, unlike your home, unlike just about everybody in this country, our government doesn't operate with a budget. We're going on 4 years that the Senate hasn't passed a budget. Our government hasn't operated in accordance with a budget, which is just, it's embarrassing. It's embarrassing, and hopefully that's going to change here at the end of the month. So I see some choppiness going into the budget debate, okay? And then I really believe our next, the leg down, the 5 to 10% correction that I believe is coming, is probably going to be coming on second quarter earnings, okay? And you all know seasonality tends to kick in right around March, April time frame, right? If you look at the past 3 years, not 3 years, 3 years in the market, seasonality usually tends to kick in right around March, April. We tend to see these, nice, rather steep pullbacks and corrections. Look at that. Not saying that past history is any indication of future results, but look at that. That's it's pretty shocking. Consistently for the past 3 years, around March, April, we end up getting this pullback. Why? Malaise starts to set in. Yeah, we have these rip-your-face-off rallies out of the gate, January, February, and March kind of levels off, and then we end up imploding. Why? Because people are overly optimistic. Q4 earnings come out at the beginning of the year. Everybody's motivated. Everybody's excited, fired up. It's going to be a great year. And then Q2 sits in and reality sets in. And also with our continuing budget fights and just shifting from crisis to crisis out of Washington, we're going to see the markets kind of wallow around sideways, which is great for us. I mean, folks, our newest service here at Top Gun Options, Trading Weekly Options, is up just month to date, folks, about $13,000, and we're only risking about $10,000 a week on average. That's our max risk. We'll put 2 to 3 trades on, and our max risk is anywhere from 10 to 15,000, and we're returning on average about $3,000 a week in profits. That's pretty cool. That's discipline. That's risk management. And I got to tell you, that's some superior execution. So if you want to give that service a test flight, you can go to topgunoptions.com/weekly-options and get airborne on a 2-week test flight, right? It's a no-brainer, folks. We have literally hundreds of traders in this service that are having an absolute blast. Not for the faint of heart, folks, right? TopGunOptions.com/weekly-options. You can scroll down, click Take a Test Flight. Why not for the faint of heart? Here's a perfect example. This week, Monday, I don't know, about an hour after we put on our weekly options trades, the market imploded, right? And people started freaking out. I said, relax, don't freak out. This is a lucky strike moment. You got to take a drag on that lucky strike. Relax. And then what happened? Moved laterally, and then the market rallied, and we were back essentially where we started the week. We've made a round trip in the market this week from up to down. And let's take a look at our performance just this week in the weekly options model portfolio. Let's go from the 25th through today, and the market's getting ready to open. Look at that. We're up over $4,000 in a week, and this week we risked about $15,000-ish, just short of that. So that's some pretty cool execution right there. And we just opened, and we're actually up about $5,000. That's a 30% return in 4 days. 30% 4 days, about $5,000 in model portfolio profits. Pretty cool, guys. So the rest of the week, Friday, we are seeing some interesting economic events, especially out of the consumer, some economic reports. Personal spending, personal income are going to be potential market movers. The University of Michigan consumer sentiment. We got some ISM manufacturing, PMI and prices, and also construction spending and vehicle sales. The Renac speaking tomorrow night at 10, so obviously that's not going to be a market mover. But a lot of this data could potentially move the market. But really, guys, I think we continue sideways here, sideways to up as we wait for the other shoe to drop. And I think that other shoe to drop is going to be coming. It might be the budget fight at the end of the month as we get closer to April. It may not, but get ready, folks. Get ready. We've had some great trades on volatility and SDS. We have some great hedges that we put on, or not necessarily hedges, but no kidding, trades. SDS is the ProShares Ultra Short, right? So as the market goes up, this goes down. As the market goes down, this goes up. And we've had some great trades on volatility as well. And that's pretty interesting. VIX is already up about 2% out of the gate with the market being flat. So that means people are starting to scramble a little bit for protection here. So going to be a great day in the market. Going to be a great tomorrow in the market as well. Again, having an absolute blast here with our weekly options model portfolio up another $300 right now. So what are you waiting for, guys? TopGunOptions.com/weekly-options. And I'll see you, those of you who jump on board our newest service, Weekly Options, Monday morning at 10 a.m. for a live trading session. About 30 minutes. We put on 2 trades. If you can't make it, don't worry about it. We immediately SMS, text, and email out the trades. And I also keep sending out SMS and email alerts throughout the week to keep people informed. Okay, got to run. Got to do a lot of trading today. Happy hunting. Make sure you hedge. And I'll be back with WCI's Friday market wrap-up tomorrow.